Hey everybody, I want to give you a quick update on the trades that have been posted in the group. So this was the one I put on July 11th, so about 7 days ago, 8 days ago. Again, it was that 1 hour signal, and I said I was expecting this pattern to play out. Might go a little higher, just getting again, and it'll snap down. Okay. So here is that recap. So this was my first position, which is that 1 hour signal. Let me go to the 1 hour chart. So there it is. Kept pulling back, got in again. I don't remember what I was trading. I was hoping to get a snap down. No big deal. Got in again up here. When these came down, set all these to break even. So then this is the only position I'm holding. So as it's pulled back here, I could have got in again, which I actually did have a pending order up here. I had a pending order and it just missed it, which would have been kind of a bummer, but no big deal. So when this snapped down, I got out roughly around here. It was like 195 pips. So I'm just showing you, this is the idea of using this when this stuff is overbought, oversold, and you're trading within structure. So again, here was I guess you could call this the pattern, that flat I was looking to play out. If you didn't take that hour trade, these 4 hours right here, because I'm trying to show you good dots from bad dots. These are great dots. You have this pattern play out as a flat. You got divergence on the MACD. So this MACD is smaller than this one. And you get the 4 hour signal. You see how good an entry those are? So if I wasn't already in, I would have took these ones. And so looking for this pattern to play out now, any trades back, I would not take a buy at all. Instead, I want something to play out like this, where then I would take the buys that come down here, looking for this to go. Might go a little bit further, but then you'll get that retrace, everything goes in profit. So I'm just trading that structure back and forth, swing trading them. So again, this was 200 some pips for the month so far, 19 days in, up about 600, so 622 pips. Right now I'm flat, so I got 0 open orders, 0 open trades. And so here are I call sequences that I run. So this was an Aussie dollar trade, a little bit of a holdover from last month, but it did 100 pips. Euro yen was 200 pips, so I got in that one twice towards the top. Let's see, pound yen. So here's that pound yen sequence. So this was that main trade that I held. These were the other trades that got moved to break even or small profit. Not sure what that one was. Let's see, NZD dollar was a sequence holdover from last month. Average these pips out. It's like 30 some pips profit. And then dollar yen is a sequence is about 100 pips, average for the sequence. So that's what I'm saying. You don't need a lot of trades when you swing trade like this. Drawdown is no big deal. So this 196 pip trade on pound yen, if I highlight this here, you can see the drawdown will show right here. So it drew down 157 pips. At least I believe that means. I don't think it was that much. But it was profitable for 85%. So I was in it for 7 days. 6 of the days it was in profit. So you can see 100, 200. Here was a 236 pip drawdown. It's no big deal. When you have a 20,000, 30,000, 40,000 pip risk, whatever you choose, you can have these drawdowns. And then as long as you're trading the structures right and you're using the indicator, eventually it snaps in your favor and they all turn to profit. And these trades, you don't have to be Johnny on the spot. So it doesn't take a ton of time. So that's my quick recap for you. I got out of this. Now it would have been nice if I held it. I got out 50 pips ago. But I'll show you why I got out. So I got somewhere in here. So let's see. So snapback. Here it is. Where's pound yen 1 hour? Here's the pound yen 1 hour. So I got out when I got this snapback signal. In case it retraced end of the month, I just wanted to get out flat. I was at my 600 pip goal, but otherwise, you could have held it. So now, as this comes down, would not take these. What I'm looking for, if I want to take a buy now, again, I'm trading the structure. This first move out, not the best trade to take. Oops. So instead, what I'm looking for, I'm always looking for those rhythmical moves I'm waiting for something to happen like this. It'll come down, give you pullback, come down, and then I'll look for any type of signal that comes in down here for a buy. I would look to take, because if you take that, it might go a little further, and then you just get in again. And eventually, you get your retrace. Trading that structure, and we'll see if that would hold. Longer term, if this is the flat and we make the move down here, I also would take any type of buy down here, expecting this to give a retrace for a bigger 1, 2, 3, 4, 5 wave move. If I get a buy in here, I'm probably going to look for a bigger trade, probably 400 or 500 pips to come back up here. So that's just a quick recap. If you take these based on Elliott waves, these higher time frames, these are good trades. Sometimes you might only get 2 a month, but those 2 in that month might get you your full 600 pips. And for me, if I'm getting 3-5% a month, really no work. This is all just off alerts. To me, it's worth it. As you're starting out, you can go a little bit heavier, but obviously if your risk is more. But remember, you got to think long term. Trading is a long term game. It's a marathon, not a sprint. So if that helps, recap one more time. Pound yen, 1 hour entry was there. As it pulled back, got in, snapped down. These two went into take profit at break even. Just had this trade running. Could have got in again. I just missed my entry order. Still got 200 pips, and it's still running. If I would have held longer, which you never get the full run, so don't ever think like, oh, I should have held it. I got the whole run. Could have got 250 pips. You never get the whole run. At some point, you have to get out and you have to be happy with what you got and move on. So that's my trading advice for the week. Maybe next week we can get back on a webinar again. We can go over some more of that. But really, if I do more of these little quick 5-minute overviews, I think that'll add up and help you more than being on for an hour. So give you a little bit. But y'all have a good rest of trading week, and we'll talk to you later.